Are you going to buy the dip on Alibaba stock again? We'll talk about that and more on today's show. What is going on, investors? Hopefully, you guys are doing well out there. Time to talk about Alibaba Group, which just during the regular session, we are recording this during trading going on, down about 5%. But take a broader view, this stock is down over 56% over the last year. We'll see it from a technical perspective. People have been saying, I'm buying the dip, and now they're down 50% in this stock. We'll talk about, is there an opportunity actually in this stock as it just continues to go down? Because look, as a stock like this continues to go down, obviously its market cap starts to shrink, and obviously the traditional valuation metrics, the price to sales, the price to earnings, start to shrink as well. We'll talk about, are those justifications on its own just to buy a stock like this? We'll take a look at the Q3 numbers as well. I'll walk you through the financials over at Alibaba. I'll be honest with you, Chinese companies do a terrible job laying out their financials for the most part, and so I'll try to make sense of them for you the best I possibly can as we walk through several different slides that I think are pertinent to this company. And then obviously we'll look at this from a technical perspective as well. So those Q3 earnings came in, revenue up about 10%, 9.7% to be exact. That did disappoint investors by a certain degree as they did miss on those revenue estimates. Now, what I did want to point out is the company is executing on their share repurchase program. Over the last 9 months, they've repurchased about $7.7 billion worth of Alibaba shares. That represents about 51% of their $15 billion share buyback program, which expires at the end of this year. My guess is because of the trajectory this stock has been on, they'll probably do another $7 billion over the next 9 months or so in order to execute fully on that buyback. Typically, when companies announce a buyback and give an end date, they'll either extend it if Alibaba is not actively in there buying those shares, or they'll burn through the entire $15 billion, which is another roughly $7 billion on top of what they already did. So you could make an argument that the share repurchase program could create a little bit of support for the stock. But look, over the last 9 months, they've been buying back about $7 billion worth of shares, and it hasn't really done much to the stock at all. Now, you could argue at a lower price, you're going to be able to buy back a larger percentage of the shares, and that's certainly something to think about, but I wouldn't necessarily buy a company strictly because they're executing a buyback. Now, from a high level, what I see over at Alibaba is really a deterioration of the business. Take a look at this. Yes, our revenues grew on that top line by about 10% to about $38 billion United States dollars, but notice that our income from operations shriveled to 86%. We'll talk about some of the factors there. Okay, some of it was not operational, but there is some problems there when you see a drop of income from operations by 86%. Our adjusted EBITDA numbers, so when they adjust out things that they want to, you're still down 25%. All across the board, from net income to adjusted numbers to earnings per share, this company is down across the board year over year. So despite an increase in revenues, operationally, this company is struggling, and that primarily is probably the number one reason why this stock is going down. Now, there are some other factors that are driving this stock down. First of all, here in the United States, probably the primary buyers of shares like this are a little concerned about investing in companies like this. And obviously, the events that we're seeing unfolding as we're recording this video in Ukraine have people wondering, is Taiwan next? And certainly if something like that were to happen, I'm not a geopolitical expert, I'm not an expert on China and Taiwan relations, but look, if something like this happens, I would not want to be anywhere near a stock like Alibaba, let alone the other names in that sector. So these are just some risks that you have to think about. Even though the stock is down this much, you have a risk this large overhanging the company. Oh, that's a big problem, okay? And not on top of that, the company isn't really delivering from a financial perspective as well. These financials have deteriorated, and we'll dive into them a little bit more. We see here that this company is actually the reverse of Amazon. So Amazon probably makes the bulk of, actually it does make, it's not probably, Amazon makes the bulk of their money not on their e-commerce business, their advertising business, obviously their AWS business, maybe a couple other business models that actually earn a profit. They actually, in the most recent quarter, especially with Amazon, they lost money on their e-commerce business. Well, it's a little different story actually with Alibaba, and we'll see more evidence of that when we actually get to the income from operations. But so we see pretty strong revenue growth on that total China commerce. That was up 7%, but that did disappoint investors a little bit. And this is where I would pay the bulk of attention when it came to Alibaba, is they have a dominant position in this China e-commerce, and this is the only profitable business unit of this company. When we get down here to cloud and other businesses that they run, those are actually actually not profitable. And I'll show those to you here. Here's income from operations right here. This is what this table represents. And so I talked about how their China Commerce Division earned $8.5 billion of profits in the most recent year. But you notice over the last year, and this will be in the Chinese currency, the RMB, you went from 68.6 down to 54. So again, despite that revenue growth that we see in total China commerce by about 7%, we actually saw that our income from operations over there actually decline year over year. That is a problem. And then obviously across the board, from their cloud to their digital media, across the board, this company is losing money. Now, what they also had to do in the most recent quarter and really impacted their net income and kind of their GAAP numbers is they recognize it here as unallocated. Over here, it's an impairment of goodwill. That came in at 25 billion Chinese, or roughly $4 billion United States dollars. So when you take our revenue of $38 billion in the most recent quarter and you start minusing off of all of these costs, you get down to income from operations over at Alibaba at $1.1 billion. On its own, that doesn't really mean a whole lot. We have to look at it actually in the Chinese currency. So here it is on the left in the RMB. Last year, income from operations, okay, we had $220 billion worth of revenue, which is just fantastic. That's actually not dollars, that's Chinese dollars. And we had income from operations off that at 49 billion RMB. Now notice in the most recent year, so our revenue went from 221 up to this 242, so up about $21 billion. Notice what happened to our income from operations. It absolutely shriveled up. It went down from 49 billion RMB down all the way to 7 billion. That is an absolute decimation. Now, some of you will correctly point out that 25 billion of this was actually an impairment to goodwill. So not necessarily a cash charge, and again, not necessarily something that we would expect to continue to repeat next year. So you're more than welcome, if you want to, take this 25 billion and add it to the 7, okay? You get to about what, $32 billion or 32 billion RMB. Excuse me for confusing the two. It's a little bit difficult. I normally do United States companies and speak in dollars. My apologies. But even if we add back in this 25 billion RMB, you add it back to 7, you get to 32. You still went down from 49 down to 32, even when you don't factor in the impairment to goodwill. All in all, it's not looking good over at Alibaba. This is not very good financials. We can see why this company is going down. On top of that, you have United States investors and quite frankly, investors across the world that are a little concerned about the developments that we're seeing across the world and the fact that the United States is kind of taking a step back, or they're not taking a leadership position in these types of things. We've seen it in Afghanistan. Now we're seeing it in Ukraine. Could we see it in Taiwan next? I sure as heck hope not, but look, I don't control things and we'll see how those things go. Now, moving on to the stock chart from a technical perspective, you are in this downward channel. And I've said it here on the investor channel time and time again. There's a lot of stocks doing this, okay? From a PayPal to a Facebook to just a number of, Pinterest, Snapchat. There's a ton of stocks that are making this move. And I say it all the time on my channel. And without fail, on all of those videos, I always get the same kind of comments back. So I'm going to explain my rationale. We're on a downward channel in Alibaba. You have to get price action outside of this upper channel line. And I don't really care how you draw this red line right here in. You can draw, in fact, I'll change it to purple. So we just really are clear with this upper trend line here with purple. You can draw it in however you want. You can come in a little tighter down here on the candles. You can set it out wide. I really don't care. It doesn't matter. You really want it touching as many peaks along here as possible. I think that's appropriate. It's starting to compress a little bit. We're starting to see the swings and the volatility in the stock compress just a little bit in the shorter term. You need a candle, you need several candles, I think, to get outside of this price action. So what does that mean? You're actually buying Alibaba at a higher price. That doesn't make a lot of sense to a lot of novice and new investors that just got back in the March lows and bought stocks and watched them only go up. They don't understand the concept of discipline and patience. With a stock like Alibaba, you need discipline and patience, because if you paid 180, 200, $200, $220, $240, $260, $300 per share on this one. Guess what? It's going to take, I don't care if you've got a 20-year, 30-year time horizon, it might take half of that time just to see that stock get back to break even. And this stock doesn't pay a dividend. It doesn't reward you as a shareholder just to hold and hope. So instead of holding and hoping and jumping in here just because of the stock is down and you happen to like it, wait for a higher price, wait for the technicals to change on this one. We've seen this stock reverse, okay? Back here in September of 2018, the stock was up over $212. It came all the way down here to 133. It rebounded, came back and retested this 130 range and then broke out. And you could have bought it, quite frankly, you could have bought it on this initial, but it didn't actually increase over the previous highs. I really would have probably bought it up at this cluster up here at 179. Now you would have had another chance to buy it down here at 152 because look what's happening with the stock as it reverses. It starts creating higher sets of lows. Right now you're doing the opposite. You're creating lower sets of lows across the way. Notice when Alibaba reversed, it started creating higher sets of lows all across the way. You didn't have to get this on the bottom. In fact, you could have bought it at the last lower sets of lows back here in March at 180, and in just a couple of months, you would have bought it up. You would have got this stock all the way up to $300, okay? And so look, wait for these stocks to reverse technically, okay? You actually shorten your time for the upside, okay? If you would have bought it all the way back here, back in August of 18, okay, stock's going down, I got to buy the dip, buy the dip, buy the dip. Well, you would have had to wait like over almost 3 years to really see the stock appreciate. Whereas you could have bought it all the way back here at 180, which would have been the same back here. And you could have saved all this time and you could have seen the stock rocket up. So wait for the same technical pattern with Alibaba. Wait for it to start making higher sets of lows all across the way here. Make some higher sets of lows. Just wait. Okay, it'll start making higher sets of lows and then it will correct. It will correct. But as long as it doesn't go below our original grouping, all of a sudden we're making a reversal formation just like we did back in 2018, 2019. Pull up a chart of Alibaba like this and study the last time the stock had a major reversal. Wait for that stock to do it in the current time. And this is when you can start inching into your Alibaba investment. That is if you're comfortable with these type of macro and geopolitical risks, which personally I am not comfortable with. I would not touch this company with a 10-foot pole. From a fundamental basis, it looks terrible. Its revenues are not really growing that fast. And on top of that, our losses and income from operations are starting to shrivel up. If that trend continues, this stock will just continue to go down and down and down because you still have a $300 billion market cap on a company that a lot of US investors are very skeptical of. Hopefully you guys enjoyed today's video. We'll be back again soon with more. Good luck with your investments.